Good morning, everybody, and welcome to the Daily Energy Markets podcast. We have Brent crude oil this morning trading down almost 1% at $60.80. Uh, the whys of it all we're going to get into right now. And let's welcome back in video Omar Najia, a derivatives trader at BB Energy. Omar, we've had reports out today about a bit of news on China. China growth continues to be just close to 5%, better than expected, but prices are falling. We've had reports that China inventories are down, the stockpiling of oil down a lot in September due to greater refinery runs. We've seen that through the year. China stock builds has been a very, big factor in the market. How do you view China building inventories? Is that bullish or bearish for prices?
Look, we've been talking since the beginning of the year that China's in trouble and China. Meanwhile, it's growing massively, absolutely huge compared to the US, Europe, all the rest of it. But still, the kind of narrative continues. I don't know if you saw, but there was a story about the $1 billion crude or product floating that's coming, and it's tsunami of
Yeah,
stuff that's arriving, right?
there's a lot of water on a lot of oil on the water in
Yeah, yeah.
tankers.
It's very interesting. So it's the Bloomberg story, and it says there has never been as much oil and oil products on the water ever.
Ever.
And the short answer to that is yes, because there has never been as many oil tankers built and carrying oil ever. So basically, again, I think basically this kind of narrative that billion this and billion that is a bit misleading. Having said that, you can't deny the fact that the price is moving lower. Would I sell it? No. Do I believe the narrative? No. Do I think the next move of consequence is lower or higher? I believe it's higher, and for a multitude of reasons. But no, I don't think basically people are going to be shorting this because of China building or not building. I don't think they're going to be shorting it because of a possible peace deal or anything like that. So no, I think basically the geopolitical situation is supportive. Whether you talk about Iran, whether you talk about Venezuela, prices are too low in real terms, and the narrative and the market is short. Right, the market is extremely short, and we have two very important lows at 55 something, 55.12 and 55.40, something like
Is that
that
a
on the
WTI?
WTI.
Yeah.
Yeah. So you wouldn't want to, you break that, maybe you have some follow through to the downside, but selling here, I think is definitely not something that I would do. I'm bullish longer term, and as I say, longer. I think the next move of consequence is higher, not lower.
Robin Mills, CEO of Kamar Energy. Welcome, Robin. How do you view this? Just picking up on the comments by Omar, but it's been out there for a while, this increase in oil on the water. It's a neutral way of describing a lot of oil, but not on its way to somewhere. Should that be, is the market starting to consider that oil in storage and sort of recalibrate what 5-year averages look like?
Yeah, look, Sean, we've seen a big build, as you know, in stocks, but that's really concentrated in these two places, China and this famous oil on water, um, and not in the OECD stocks, not in Cushing, not in the traditional places, and that of course
And for
makes it
much of
harder
the
to
year,
interpret.
for much of the year, that oil in storage in China has been quite bullish for prices rather than bearish as it was a build in Cushing, for example.
Oh, absolutely. Look, I see the Chinese oil as basically neutralized, right? It's there to be stored, not to be used unless prices go up a lot. Yeah, it caps the upside if something happens and the Chinese start withdrawing. But if prices were to go high, a lot higher for some reason, but otherwise, no, it's basically off the market. The oil on water, I think, is different, but I don't read that as a particularly bearish signal, to be honest. Look, I think there's two factors why the oil on water is so high. One is tankers are making much longer voyages because of the Red Sea disruption. And two, there's a lot of sanctioned oil, Russian and Iranian oil, which is struggling to be sold, and which is sitting around waiting for transfers to other vessels and or waiting for ports to take it and so on. But a lot of this is not non-sanctioned oil that is struggling to be sold. Some of it, yeah, perhaps. But I think a large part of that oil watch is just other kind of semi-structural factors in an unusual market.
Mark Oswald, Chief Economist and Global Strategist at ADM Investor Services International. Mark, welcome and good morning. The idea that this week, as referenced in Omar's earlier comment, the geopolitics of things, but where are we at in the macro picture, do you think, the China-US face-off? We have a big meeting this week between the Treasury Secretary of the US, Bessent, and the Vice Premier of China after the sort of recent decisions by China to put some limits on rare earth exports, which has really sort of shooken up that relationship. Where do you see that going and its consequences?
Um, there's clearly, I mean, we are in this stage with the geopolitics, particularly with anything to do with the US, where everything is effectively ambiguous. You get one statement one moment which sounds inflammatory or escalatory. On the other hand, you get comments on the other which basically sound like de-escalation. We know what Mr. Trump wants, certainly. He's laid that out in overnight. He wants less fentanyl from China, more soybean purchases from China, and don't play the rare earths game with us, whatever that's meant to mean. Um, Clearly, that's the sore point. I think we're just moving gradually. A lot of this is posturing, and basically, a lot of it, the noise that comes out of both Beijing and out of Washington probably needs to be faded, but will still have an impact on markets because a lot of it is algo driven and just looks at the headline and takes it at face value.
But on
Um,
this occasion, Mark, on this occasion, just to look at it from the China perspective, I mean, if one takes the sort of, I mean, when do these things start, chicken and egg, who did the last punch in the boxing match? But it looks at, in this case at least, that China kind of shook things up by surprising the world and America with this announcement around rare earths. It's a big calling card they have. Your thoughts on why they're playing it at this time?
Um, I I think they're basically trying to assert their authority. It's a slightly dangerous game because it's a card which can effectively only be played once. Because you get to the stage where people say, "Well, is China our reliable partner?" Because one of the things that they're trying to um, project to the rest of the world, the US is an unreliable trading partner and we are a reliable trading partner. But by introducing these
Been easy to
export
make that
licenses,
argument this year.
yeah. And certainly this year, if you look at actually, the balance of exports in China, that is shifted very sharply, particularly Africa up about 50%, Asia 11 15%, Europe 11, it appears that way. The export licenses are basically bureaucracy, but it is an element of control. Um, so it really is basically trying to tell the US, look, we've got you're going to take years if you want to actually catch up with us. And even if you do it in partnership with other countries, it will still take you years to actually catch up, not only on the mining, but also the processing of rare earth. The irony of the rare earth thing, or critical minerals, one should better say, is it actually accounts for, in mining value and mining output value terms, for just 0.05%. And that's really where the problem lies, that for a lot of people, the investment in this, given the returns, is, it's just not going to be there other than for supply chains. But we would actually have a huge rise in costs for rare earths. So they are playing to their strongest card. But if you look at the breakdown of the GDP data today, the underlying economy is very, very weak.
Omar, I was seeing an interesting data point over the weekend, just trying to comprehend the scale of importance of the rare earth in some tangible way. And one of the sort of data points was that in the 1,000 missiles that Israel and Iran exchanged in June, each one of them had between 2 and 20 kilos of rare earth precious minerals in each one. 2 kilos to 20 kilos in each missile of the 1,000 exchanged, i.e., these things are critical for everything. Your thoughts on China playing this card now, and is it relevant? Does it have follow through? Does it have consequence?
Yeah, I think basically I mean, you have to understand things from the US point of view, right? Trump is a showman. He basically, the whole administration is all about um, narrative control, projection, and trickery, right? They have no cards to play with China. They're absolutely zero cards to play with China. Why? Because they control rare earths. The US has nothing. Even if they could mine it, they can't refine it because it would take so long. So you can forget about that. They have them over a barrel, and that's it. Which is why Trump, will keep until November 2nd. So this is getting a bit old. The stuff with, we, and if you look at if you look at the US and if you look at China, right? So that why is China a reliable trading partner? Because China is not eating its allies. The US is actively eating every single one of its allies, from the UK to the EU, every single one of them, to the Australians, the Japanese, every single one. It's saying if the water's rising, we will stand on your shoulders and we will be the last to breathe and you will drown. And so it's very clear, and the US is already in deep trouble because of this debt. Last I read was like 37.9 trillion. And the thing about when things break is that until they break, everything looks okay.
Mhm.
But when they do, it's God. I mean, gold is trading at 4,300 USD. And gold, by the way, the amount of paper gold out there is massive. So the amount of control that they have to keep prices down is ginormous, it's huge. And still, the price is 4,000. And now they have a problem with silver because everybody who can't afford to buy gold is buying silver. And they have a problem with physical gold and physical silver because you can't get any, right? And so this is telling you that there are massive stresses within the financial markets. And when we talk about financial markets, we talk about the US, and that's it.
It
So
is
the
the only
dollar,
market.
yeah, the
Rob,
dollar's stuffed. Yeah.
Robin, looking at this sort of obviously looking at the demand side there, and what about supply side? We're now 7, 8 months into an OPEC plus supply increase month on month. They're going to be meeting again in a few weeks or whatever, 10 days or so, to give us a view on where they continue or not with this current supply increase yet another month. Where do you think their decision making is at vis-a-vis its intersection with price?
So I think at the moment, current trend, will continue. These probably these relatively now modest increases, not the blockbuster increases. Um, Even if prices keep slipping lower, I think there's still some tolerance to go a bit lower from here. If they were to change course now, it looks a bit like kind of blinking in face of the market. If prices really crash into the 50s, that's a different story. But I think for now, no, they'll continue to make these moderate increases. And of course, the impact of these increases, as we know, fades away because more and more members can't actually live up to the production levels that they've committed. Then you've got some concerns elsewhere on the supply side. These attacks on Russia, of course, those potentially also hampering some Kazakh output. And you have a likely slowdown in the US production as well, which
So
creates some
where
more
do you
room for
where do you
OPEC.
identify? One of the things I'm struggling with at the moment is identifying what OPEC Plus's destination is. Like, when do they reach the port on this particular supply increase program?
Yeah, well, that's the really, really key issue that is still not clear, I think. And I think there's a couple of scenarios there. One of those, so I don't believe we're in the price war scenario that they're going to go as low as possible and try and flush out competition. That's one possibility. I don't believe that's what they're going for. But I think one other possibility is clear the decks, get all of these voluntary cuts out of the way. Everybody's reset, and then they can say, okay, now we can go back to some more sensible baselines for everybody and bring in the people who weren't part of the voluntary cuts. And now everyone is pumping at their maximum, so we can see that the ones who can't live up to it, they can't argue that they have spare capacity anymore. Their baselines can be reset at something sensible.
Mark, we talked there a bit about the China-US relationship and the stresses in that and the meetings that are taking place. The Treasury Secretary, as we said, meeting with the Vice Premier this week to lay the groundwork for a summit or meeting between President Trump and President Xi on the sidelines of an Asian conference in 2 weeks' time. The same is seems to be we're on a pathway to another Trump-Putin meeting. What is the pathway to that meeting? What needs to happen or what could happen? What could that deliver? We had the big show in Alaska. Is this episode 2 of the Netflix series? It's entertaining but meaningless.
Um, where that goes, I think Mr. Trump already gave away part of the thing. He said, "I don't know if Putin's playing me." And it's interesting that following the meeting between
He also said
Zelensky and
that
Putin.
Zelensky couldn't have Tomahawk missiles, which is probably a bit
Yes,
more tangible.
that's probably more significant in the sense that Trump also basically said you're going to have to actually make some concessions here, which are not acceptable to the Ukraine. But then it doesn't really have many cards to play. The EU is still it's divided. It doesn't really know what it wants to do to support the Ukraine other than what it's already doing. So it then becomes a question of if there aren't going to be Tomahawk missiles, which would have basically given the Ukraine not the upper hand, but the ability to strike at Russia's energy infrastructure, which was one of the things supporting oil prices. Where is it left? Because it also has a dwindling army in the sense that there's not that much, there's not
Apparently,
many
Ukraine
more
is
troops.
is is more vulnerable and exposed to the stopping of exports of rare earth from China than they are from arms supply from the West because it's a critical
Yes.
component to their drone manufacturing, which has been the sort of backbone of their fight in Russia.
Yes, absolutely, it has. So, I'm not convinced that anything will actually come of the Trump Putin meeting, other than a lot of rhetoric, most of which we will basically have to sift through to see if there's actually anything genuinely tangible, rather than some ambiguous framework commitments, which, as we've seen sadly in Gaza, doesn't necessarily mean that it's all over bar the fighting.
Probably the one of the interesting sidebars on this meeting with Putin is what route his airplane will take in international skies in order not to be exposed to the arrest warrant from the International Criminal Court. The a bit like Netanyahu has to surf around the world. But on that point, and you're obviously you spend a lot of your time in Poland. What is the view from Poland on this issue? What do the Polish want clearly on the front line of this crisis?
They basically want everyone to give Ukraine as much, or if not more support than they're currently giving, and they don't actually. They would probably largely align with what Mr. Zelensky has said, that there needs to be more support from Europe, US, NATO, G7, and G20. Poland's basically always taken the stance that particularly the EU has not taken the Russian threat seriously, and they're also worried at the moment that the divisions within the EU are also hampering any sort of overall move towards stronger defense of Europe on its eastern border.
More status quo. Let's go to the survey question, which sort of brings us back to the opening question, which I'm still struggling with. China's crude oil stockpile flows dropped sharply in September, as reported by most secondary sources. Is China's oil stock build bullish or bearish for prices? The we've seen both happen. You know, we've had the stock build in through the year, which has been bullish for prices generally. Generally has been viewed that the 500,000 barrel a day build in China inventories through the first three quarters has been supportive of prices. And now it dropping off in September. Is it contributing to this recent price decline? So where do you see the general oil stock build in China? Is that a bullish signal or bearish? If it was the US, is the interesting alternative or contrast. Stock builds in the US are typically a bearish signal, not bullish as they have been in China. But is China's oil stock build bullish or bearish for prices? Um, Omar, looking forward, you're staying there if this market breaks in any way with the sort of down the supports numbers that you said in the mid 50s on WTI. Where do you see or do you identify anything that would give this market a different direction than it is currently? We've sort of broken out of that 65 handle sweet spot where we've been for many months through the third quarter. Now we seem to be getting to like 60 more than 65 on Brent. Your thoughts on what would give this market a new direction?
Look, I think basically you have to understand that oil is driven a lot by geopolitics and a lot of exogenous markets and all that kind of stuff. Money flows, what hedge funds are doing, et cetera, et cetera. The narrative for now is lower, and it's lower because if so the US is the Fed is cutting interest rates as CPI is going up, which is and they're doing that because they're in trouble. They can't pay their debt or they can't pay interest on their debt, right? The last card to fall is going to be oil prices. Everything's going to go up. The last thing to go up is going to be oil. But when that goes, there's no more, CPI is okay and there's still no inflation because then everybody's going to see it. You're going to see it in the price of electricity, in the price of filling up your car, heating up your home, going into winter, all that kind of stuff. And then it's a thing where the emperor has no clothes. So it doesn't matter anymore what Trump says that, this is the greatest economy ever and we're doing the best ever and all this kind of stuff because it's basic. Everybody's going to see that they're cutting interest rates and continue to cut interest rates because they have no other choice but to do that, even with rampant inflation. You're already seeing it with gold.
Buy gold.
Yeah, no, but you're already seeing it with gold, right? Now, gold is very interesting. I think people will rotate away from gold because, 4,500, 5,000, you have to be kidding me, right? So I'm
It's
not
cheap
such,
compared to 10,000 though.
yeah, absolutely. But the problem with gold is, you can't settle with it, you can't move it, you can't, do very much with it. So anyway,
You can throw
so
it
I
to
think
each other.
basic,
You can sort of pass it in the back garden.
I think oil is the last thing to go up, and I think everything's going up, and I think this is a worldwide issue to do with inflation, to do with money printing, to do with debt. Worldwide meaning the part of the world that controls the world, which is the West. So I think all that is going to go higher and higher and higher. And the last thing to go up would be oil. And when oil starts to go up, I'd start to worry about everything else basically, because then it would be, extremely interesting to see what they do. So I think the direction for oil is higher. I think this is an unnatural thing, kind of like a cork being pushed underwater. As soon as that pressure comes off, and it has to come off, it will come off, not if, but when, then basically we bob up. And then basically it's off we go to hell basically because everything skyrockets.
Robin, just picking up on that and your earlier comments, we both live in the Gulf, and while America and other places have control over interest rates or other things in order to sort of monitor and prod their economies forward, we generally have some sort of control over oil prices, and we impact that to respond. I'm trying to understand at what point this price in oil, $60 and a weak dollar, which makes the currency of the Gulf states also weak because they're pegged to the dollar. And yet there doesn't seem to be a macro pain in the neighborhood. Could you just speak to where the intersection of those things are that could, force Saudi's hand a bit more on this issue of supply?
Well, the macro outlook for this year and next year is still in the Gulf is still good. Actually, even been upgraded. Okay, some of that is just a mechanical effect of higher oil production, but the macro outlook is still good. I don't see significant pressures there. Look, I think the big issue there is if the Saudis really feel the need to cut back on their budget, that impacts the domestic economy, that impacts neighboring countries who are entwined with them.
But they
That would
have cut
change
back on
things.
spending programs and different projects, the announcements anyway.
Yeah, rephase things, rationalized, got rid of some of the sillier things. Yeah, that's true. But there hasn't been a really big cut in the Saudi budget that really. I mean, a lot of these projects are a bit rather pie in the sky anyway. I think the thing would be, do we start seeing budget cuts that affect the real Saudi economy and affect ordinary Saudis and their spending power, rather than what goes into the pockets of international consultants? That I think would be a change. I think at the moment the Saudis are holding the line on that. The debt situation for them is acceptable, even up to 2030. Yeah, debt will accumulate, but it's not unsustainable. And then by 2030, they hope they'll be in a rather different position. Some of the Vision 2030 stuff will have paid off by then. More of a diversified economy. Oil productions will be significantly higher. The gas will be coming through, and a whole bunch of things would have changed by then.
Mark, just finishing off with where we go with the Fed, which is another kind of big sort of signal to the markets. Obviously, we're in a downward cycle again, a cutting of rates, despite the U.S. economy still looking pretty decent. Your thoughts on how the Fed are assessing these things? Are there moves to the down to cut? To easing logical given the macro picture? How do you think they step forward?
Um, well, they'll certainly be hoping that the forecast for Friday's CPI data, which I would remind everybody, because of government shutdown, one has to doubt its accuracy because getting all the data points will be difficult. But that's
It's
by the
probably
by.
about as reliable as the China 4.8% we got today, right?
Yes, which
We're in the same.
doesn't look credible, but
Yeah.
we're talking about 4.4% on headline CPI, 3.1 on. It doesn't sit comfortably. It doesn't sit comfortably above all because you've got equities basically close to their all-time highs, credit spreads still very much closest to you sort of saying, well, we're worried about the labor market, and even the labor market's not that weak. Yes, it's not growing at the 100,000 they need their break-even level, but we're still only talking about around zero. It's about zero. The case isn't strong, so this is basically a lot of this is political influence. It's the way that the wind's blowing. And that will happen even with or without Mr. Powell. So the Fed is going to basically go another 225s. The real question is where does it end up? And I guess we actually haven't got much in
Well, it ends
the
up whoever gets hired for the job, right? I mean, whoever that Powell's
yes.
done in a few meetings, so it ends up if there's a Trump guy, you'd imagine interest rates are going to zero. Or I mean, not
No.
zero, but some
Yeah, I mean,
fairly
I think
easing.
we probably only end up somewhere like 3.25, which is not that much lower than, once we've done the two cuts, we'll be a quarter point away from that. Um, but it's what happens with both they may well end the quantitative tightening. That would be significant. And at the same time, we may get even more of a skew from the US Treasury, which is effectively doing quantitative easing with this massive increase in issuance of bills and lowering long-term bond issuance. A lot of it is, one would have to say, smoke and mirrors, as basically Omar was saying earlier. So the Fed, I still think, basically now is not the major player that it was, say, in the last decade. And I think that's all central banks. It is down to politics and fiscal policy and regulatory policy. And central banks basically are just whipping boys for a lot of the politicians.
So you don't look, you no longer looking at the macro, whatever the data it tells you is should the rate cycle be. You have to look at the politics. Here we have bullish. Is China's oil stock build bullish or bearish for prices? It is bullish. And we'll have to look at that. Obviously, it's Monday. Oil prices are down in early trade in Asia today. Prices trading under $61 a barrel. Big meetings coming up with, as we said, probably the China-US meeting, Treasury Secretary and Vice Premier. The big meeting to keep an eye on. The outcome of that could either be, oh, crikey, this is a big divorce, or no, they love each other again for another few weeks until Trump and Xi meet. The love each other could be supportive for prices. The divorce signals or smoke could push this price below 60 into the 50s. So probably the biggest meeting to keep an eye out on this week. Thank you guys very much. Wonderful to have your insights this Monday morning. Omar Najia at BB Energy in Dubai, Robin Mills, CEO of Kamar Energy, also in Dubai, and Mark Oswald up at the crack of dawn, getting his week started nice and early. The early bird catches the worm in London. Thanks, Mark. Best of luck. Have a great week, everybody. All the best. Thank you.
Thank you.
Thanks, Ed. Bye.